This week, the Minister of Finance introduced Budget 2023 in the House of Commons. The new budget proposes a number of new programs and changes to existing programs that are going to impact Canadians from coast to coast. In this video, I'm going to focus on the changes that impact people who are getting ready to retire or people who are already retired. I'm going to talk about what the changes are, what that means for your finances, and things that you can do now to prepare yourself for when those changes are implemented. And if we haven't met yet, my name is Mark Walhout. I run an investment advisory and financial planning business called Walhout Financial. I help people prepare for and live their ideal retirements. If you want to see more retirement planning videos like these, consider subscribing to the channel. And if you like this video, give it a thumbs up so that more people like you can find these videos. So with that, let's talk about the changes in Budget 2023 that might be impacting your finances. So let's start with budget measure number 1, which is a boost in the GST HST tax credit. The GST HST tax credit is a refundable tax credit that is targeted to low and modest income Canadians. Budget 2023 proposes to add to this program with a one-time top-up payment of up to $153 per adult, which is equal to 2 times the January 2023 payment. The government has labeled this top-up payment as the new grocery rebate. In response to rising grocery prices, the government wanted to help provide some additional dollars to low and modest income Canadians to help them keep up with the rising cost of groceries. The credit pays up to $306 per year to single tax filers and $612 per year to a married couple with no children. That's today's benefit. That's the existing program as it is today. Families with net incomes above $39,826 in 2021 begin to see their benefits clawed back by about 5 cents on every dollar of income above that $39,826 threshold. So a family with net income of around $52,000 to $55,000 Canadian per year would see their GST HST tax credit clawed back completely. There's nothing that you need to do in order to make yourself available to this credit other than file your tax returns. So the government reviews net family income on an annual basis to determine whether you're eligible for this tax credit. So simply all you need to do is file your tax return with your spouse to make sure that the government has the information available. And if you are eligible for the program, they will send the benefits to you either by check or electronically by electronic transfer. Let's talk about budget measure number 2, which is an expansion of dental coverage for Canadian families. So in the 2022 budget, the Canada Dental Benefit was introduced, which provides coverage for uninsured Canadian families of low and modest incomes. The changes in Budget 2023 will expand that coverage to apply to all family members for households that have low or modest incomes, and in many cases that will now include Canadian retirees. Details on the dental program are set to be released later this year, but here's what we know so far. There's a $13 billion total commitment to the program over 5 years, which is an increase from the $6 billion initially budgeted for the program. Coverage will be available for families with net family income below $90,000 per year, and there will be no co-pays for families with incomes below $70,000. So there are no action items right now as it relates to the Canada Dental Benefit, but all in all, it's good news for Canadian retirees. There's going to be a lot of Canadian retirees and retiree families, retiree couples that are going to receive benefits under this program. And that's fantastic because healthcare in retirement, specifically things like dental care, can become very expensive. And so it's fantastic that this coverage is going to be available to Canadian retirees. The third big takeaway from Budget 2023 to me was what was not in the budget. So every year there are rumors that the government is going to increase marginal tax rates, or they're going to increase the capital gains inclusion rate, which would increase taxes on Canadian retirees who sold investments in non-registered accounts or sold vacation property. Neither of these things were done in the budget this year. So that is good news for Canadian retirees, but I always do find it interesting that around budget time, these two rumors continue to come up again and again, that the government's going to raise tax rates or they're going to increase the capital gains inclusion rate. Again, good news, neither of these things happen, so retirees can breathe easy for another year, that taxes aren't going up, and that the capital gains inclusion rate is not going up either. So those are the big 3 changes in Budget 2023 that I believe impact Canadians who are getting ready to retire or who are already retired. But there were a number of additional measures that I think could impact a number of Canadian retirees, but not all. So I'm going to include now a list of my honorable mentions in Budget 2023 that might impact Canadian retirees. So my first honorable mention goes to the expansion of the automatic tax filing service. The service is called File My Return, and it's offered by the CRA to Canadians with very simple income tax situations. In many cases, people who are eligible for this program will receive an invitation from the CRA to file their tax returns using the service. And what you do is you answer a few simple questions over the telephone, and then at the end of that call, your tax return is automatically filed. And this is a big deal for a lot of Canadian retirees, specifically Canadian retirees of low income. If you don't file a tax return, you can't get benefits like the GST HST Tax Credit or the Guaranteed Income Supplement. And there are a lot of Canadians who are retired and who are just simply not filing their tax returns because they either don't have any income, or they think that there's really no reason for them to file the return, or they just don't want to spend the money on hiring a tax preparer to do that work for them. So the expansion of this service, to me, hopefully means that more low-income Canadian retirees will file their tax returns, and they'll get all the benefits and entitlements that they should be getting to help support their lifestyle in retirement. Next honorable mention goes to the increase in the allowable RESP withdrawal amounts in the first 13 weeks of education for RESP beneficiaries. So you might be wondering, what do RESPs have to do with retirees? Well, many retirees hold RESP accounts for their grandchildren. So the changes that were announced in the budget might impact you if you're in this situation. So under the previous program, you were limited in the amount of growth and grants that you could withdraw from the RESP inside of the first 13 weeks of the beneficiary's education, or your grandchild's education in this case. Previously, you were limited to taking out $5,000 of growth and grants in the account inside the first 13 weeks of your grandchild's post-secondary education if they're a full-time student, or $2,500 if they were a part-time student. The changes in the budget have increased these initial amounts from $5,000 for full-time students up to $8,000 of education assistance payments or growth and grants that you can withdraw from the RESP inside of the first 13 weeks of your full-time grandchild's education or your grandchild's full-time post-secondary education. For part-time students, that limit has gone from $2,500 in the first 13 weeks of growth and grants that you can withdraw from the RESP up to $4,000 for that first 13-week period. And this change is significant because the cost of education has risen significantly over the past number of years, and the government hasn't really changed much as it relates to RESPs over that time frame. So really it's just a change to recognize and acknowledge that education costs have gone up, and that students and holders of RESPs need to withdraw more money earlier from RESPs in order to fund those education bills. And that's all I have for highlights from the 2023 budget that specifically apply to Canadian retirees or people who are getting ready to retire. I hope that you've enjoyed the video. If you like it, consider giving it a thumbs up and subscribe to the channel by clicking the button below so that you can have more of these videos pumped to the top of your feed when I put them out. Also, please drop any questions or comments below. I love getting questions and it gives me ideas of things to focus on for upcoming videos. And if you scroll into the comment section below, you'll see a number of different resources that I've put together for people who are thinking about retirement or getting ready to retire. Again, I hope that you've enjoyed this video, and I'll speak with you soon. Take care.